Hello everyone, I am Pratap here. We are at part 1 of lesson 30. This is about sideways long trade setup. If this is your first visit to our channel, please understand this lesson is having dependency on the understanding of the earlier lessons. You can access all the earlier lessons at our NeoStock YouTube channel. So at our channel homepage, click on the tab Playlists. Here you are finding different playlists and you should select the playlist Supply Demand Zone Price Action course. Here you have all the earlier lessons are available. Click on this View Full Playlist. Until lesson 29, you can find all the videos here. To access the first lesson, scroll down to the bottom of the page. Here, starting from lesson 1.1, I kept all the training lessons in an order. So please go through all these lessons one by one. But you should learn all the training lessons according to my training instructions. Then only this course will be useful to you. All the training instructions are available at our Telegram channel. I am providing the link to our Telegram channel in this video description. So go to the video description, join at our Telegram channel. So in the Telegram channel, old messages or maybe in the pinned messages, you can find all the training instructions. If you can learn the course according to my training instructions, then it will be helpful to you to become a very good independent trader. So please make use of this opportunity, and after completing all the training lessons, then you get into lesson 30. Okay, part 1 of lesson 30 is about sideways long trade setup. Sideways trend you already learned earlier lessons. So how to identify sideways trade setup? To identify the sideways trade setup, the mandatory rule is ITF trend should always be sideways. It is a compulsory rule. Then only you should look for sideways long trade opportunities. So if the trend is sideways, if the ITF trend is sideways, can we take long trades? No, you cannot. There are other rules. They should satisfy, then only you can plan the trades. That is what you are going to learn in this video. Okay, HTF trend should always support long or short trades. Based on the HTF trend, we will be taking a decision whether we should go for a long trade or a short trade. What are the rules that you will be learning? Apart from this, we will also be looking for LTF zone confluence with ITF zone because it is a long trade. LTF demand zone should always be in confluence with ITF demand zone. Then only you should go for sideways long trade setup. Without ITF demand zone confluence, LTF demand zone, without ITF demand zone, you cannot plan the trade. Always remember this rule. And also, curve and HTF price direction also plays the important role while choosing your trade. So how curve is going to help you, how HTF price direction is going to help you, that is also you are going to learn in this video. Okay, now let's quickly get into all the rules that are going to help in selecting sideways long trade setup. So we have different scenarios. If any of those scenarios are satisfied, then you can plan the sideways trade setup. So now we are going to discuss all the scenarios one by one. The first scenario that supports sideways long trade setup. If you look into this chart, we are primarily focusing on HTF demand zone and ITF demand zone. Apart from that, you will also be focusing on ITF demand zone and also LTF demand zone. Why both HTF and HTF, both demand and supply zones we are focusing? That is mainly related to the price direction. But even before that, here let us assume our HTF trend is uptrend and ITF trend should always be sideways. You should not forget this point. What about HTF trend? Should always be uptrend? No, it can be even sideways also. That scenario we will see a little later. So the first scenario is HTF trend is up, ITF trend always it should be sideways. Okay, what about the others? So price direction. The HTF price direction, we are focusing only on the HTF price direction. HTF price direction can be demand zone to supply zone or supply zone to demand zone, but in both the scenarios the rules will be changing. The first scenario we are seeing, let us assume HTF price direction is from demand zone to HTF demand zone to HTF supply zone. If you look into this price, see here, prices entered into the HTF demand zone. Now HTF demand zone is pushing the prices towards the HTF supply zone. So definitely we agree the HTF price direction is from HTF demand zone to HTF supply zone in this scenario. So we all agree with this, right? Okay. Let us assume here we have ITF demand zone is also there. Okay. Here one mandatory rule is our LTF demand zone should be in confluence with ITF demand zone. So here you have a LTF demand zone. Where is this LTF demand zone? This is overlapped with ITF demand zone. That is what zone confluence. It can be exactly inside the zone or it can be at the proximal line of the ITF demand zone, it can overlap, or at the distal line of the ITF demand zone also the LTF demand zone can overlap. You already learned zone confluence rules in lesson 16. Okay, the rule is the demand zone confluence should always be ITF and LTF demand zone confluence. Both should overlap with each other. And this is a mandatory rule for all the scenarios. What is the another mandatory rule? ITF trend should always be sideways. Both these rules we cannot change. But remaining can change. HTF trend can change. HTF direction can change. At the time, the other rules will be changing. But the mandatory rules are ITF for all the scenarios. ITF trend should always be sideways. And demand zone confluence should always be LTF demand zone confluence with ITF demand zone. Hope this is clear for everyone. Okay, what else? Curve. Curve also plays the major role. So in this scenario, which scenario? When HTF trend is uptrend and HTF direction is from demand zone to supply zone, remaining to our mandatory rules. In this scenario, the LTF demand zone curve can be either low on the curve or it can be equilibrium, but should not be high on the curve. High on the curve, we never take sideways long trades. So that's what always remember. Your LTF demand zone curve should always be either always low on the curve or equilibrium in the scenario 1. Other scenarios, this rule may change. Hope you got it. Only when HTF trend is up, ITF trend anyway sideways, HTF price direction is from demand zone to supply zone, and then demand zone confluence anyway always LTF and ITF demand zone confluence. So when these conditions are satisfied, then only you can plan long trade, sideways long trade setup, trade plans only when LTF demand zone curve is either low on the curve or equilibrium. And also remember, equilibrium scenario occurs only in this scenario. Remaining scenarios, the curve always be in low on the curve, that we will see in the next scenarios. Okay. In this scenario, what you can do? You can plan a trade when prices are reaching to this LTF demand zone. Because it is overlapped with ITF demand zone, and when the trend is uptrend and HTF trend, and ITF trend is sideways, HTF price direction is because it is from demand zone to supply zone, HTF demand zone to HTF supply zone, and also the demand zone curve is low on the curve or even equilibrium in either scenarios. When prices reaches to this LTF demand zone, you can plan the long trade. But what about the target? So the target should be until the LTF supply zone. Let us assume there is a LTF supply zone is available here. So once the prices reaches here, you can plan the trade and the target should be up to this lower time frame supply zone. So let us assume prices reached here. So can we plan a trade? Yes, you can plan a trade provide all the checklist items are satisfied. Do you remember you learned checklist items in lesson 20? But lesson 20 checklist items, there are some changes because the lesson 20 checklist items are for bullish and bearish trade setup. But remember, this is a sideways trade setup. Sideways trade setup, couple of checklist items will be changed slightly. Majority of the checklist items, they are same as what you learned in lesson 20, but few checklist item rules are changed. That's why part 3 of this lesson 30, part 3 of lesson 30, that is upcoming lesson. In that lesson, you will be learning the checklist rules for sideways trade setup. Until then, you remember, if whatever the checklist items you are going to learn in part 3 of this lesson, if all those checklist items are satisfied, then only you should plan the long trade. Otherwise, there are higher chances of this zone violation. Hope I made it very clear. Let us assume all the checklist items are satisfied, then definitely you plan a trade and your target will be until the immediate LTF supply zone. So once prices reaches, you can get the profit. Due to any reason, if your analysis goes wrong and if the stop loss is violated, you will exit the trade and book the loss. So you are aware of all those concepts. But remember, this is the first scenario. This is how you will be planning your sideways long trade setup as per scenario 1. Okay, then what about scenario 2? How it is different from scenario 1? Okay, now let's discuss scenario 2. That is when price direction is supply zone to demand zone, how to plan the trade, let us discuss. So your HTF trend is uptrend, no change compared to the scenario 1. ITF trend is always sideways in any scenario. But now HTF direction is from supply zone to demand zone. You see here, prices are coming from the supply zone. They haven't reached the HTF demand zone. That means price direction is still towards the demand zone only, HTF demand zone. In such kind of situation, when HTF price direction is from HTF supply zone to HTF demand zone, how to plan our trade? Sideways long trade setup. What is the another compulsory rule, mandatory rule? The LTF demand zone should always overlap with ITF demand zone. See here you have LTF demand zone is overlapped with ITF demand zone. So this is a mandatory rule for all the scenarios. Okay, in this scenario, can we take a trade? No. There is one more rule is there. If that satisfies, then only you have to take the trade. Earlier price direction is from demand zone to supply zone. At that time, what is the curve? Curve could be at low on the curve or equilibrium. But what about this scenario? This scenario is different because price direction is from supply zone to HTF supply zone to HTF demand zone. In this scenario, you should plan your trade only at low on the curve. LTF demand zone curve must be low on the curve. Even equilibrium also, you cannot take long trade because HTF price direction is not supporting us. So the safest approach is only on the only at low on the curve, but not equilibrium. I repeat, but not equilibrium. Only at low on the curve. When price direction is, which price direction? HTF price direction is from supply zone to demand zone. See, it not yet reached the HTF demand zone. That's why if prices reaches to this low on the curve, here you have a ITF demand zone. Inside the ITF demand zone, your LTF demand zone is overlapped. At the time, this LTF demand zone must satisfy the curve as low on the curve. Then you can plan the trade. You may ask a question. Suppose if both these ITF demand zone and LTF demand zone both are overlapped with HTF demand zone. So when both are overlapped with HTF demand zone, still they satisfies the demand zone curve as low on the curve. So that's why you can plan the trade. Whether it is inside the zone or a little above the HTF zone, you need not worry. Only thing you should look for, the demand zone curve is at low on the curve or not, and also the demand zone is overlapped with ITF demand zone or not. LTF is your entry zone. That is overlapped with ITF demand zone or not, you need to verify. Because both the low on the curve is satisfied and our demand zone is overlapped with LTF demand zone, even the price direction is against to the primary direction. Primary direction, HTF demand zone to HTF supply zone. That primary direction is not supporting us here. Even then we are planning our long trade because we have a ITF demand zone and LTF demand zone is overlapped with ITF demand zone, and also LTF demand zone curve is low on the curve. What is the reason behind taking this long trade? Because HTF trend is uptrend. That's why we are taking this decision. HTF trend is uptrend and it is low on the curve. Many times ITF zone may push the prices up to HTF supply zone. That's why we are taking trade. Even HTF price direction is opposite side. So this is a second scenario. What is the next scenario? Third scenario. Okay, before getting to the third scenario, if prices reaches LTF demand zone, we can take a long trade. And whatever the checklist items you are going to learn in the third part of this video, if all the checklist items satisfies, you can plan a trade, and then the target is till the immediate LTF supply zone. See, all the checklist items already you learned in lesson 20. Majority they are valid as it is. Only couple of changes will be there that you will be seeing in lesson 30.3 video, that is upcoming video. Okay, fine. This is scenario 2. What is scenario 3? Scenario 3, see here, HTF trend is sideways. ITF trend should always be sideways. Earlier we looked into HTF trend uptrend, but now you are looking into sideways. You may ask a question, can we consider HTF trend as a downtrend? No. Downtrend, you have to plan only bearish trade setup, sideways short trade setups. So only HTF trend should be either uptrend or sideways. At the time only long trade setups you can plan. Sideways short trade setups you will be learning in the next video, second part of this video. Okay, now this rule is very clear. Now HTF trend is changed to sideways. Anyway, ITF trend should always be sideways. Now what is the price direction? In this scenario, the price direction should always be HTF demand zone to HTF supply zone. Then only long trades are allowed. When both the trends are sideways, HTF trend and ITF trend, price direction from HTF supply zone to HTF demand zone does not support sideways long trade setup. Does not support. Only in this scenario. Which scenario? When prices are moving from HTF demand zone to HTF supply zone, at that time only sideways long trade setup will be supported. Okay, fine. So that's why HTF direction is demand zone to supply zone. When HTF trend is sideways and ITF trend is sideways. Okay, what else? The compulsory rule you already learned. In any scenario, your LTF demand zone should always overlap with ITF demand zone. So that's why here we have a LTF demand zone that is overlapped with ITF demand zone. Now can we plan the trade? No. We have one more rule. What is that one more rule? Curve. That is nothing but location. Okay, so this is a mandatory rule. Both are having confluence with each other. So now the demand zone curve should LTF demand zone curve must be low on the curve. Even equilibrium in this scenario, we are planning our trades. We are not planning our trades. Only low on the curve. In that scenario only, sideways long trade setup should be planned. This is the safest approach. And of course, the target zone, when once prices reach here, the target should be LTF supply zone. So now let us assume price reached here. Can we plan a trade? If the checklist items are satisfied, whatever you are going to learn in the third part of the video, the checklist items are satisfied, then definitely you can plan a long trade. If checklist items are failed, there are higher chances the zone might be violated. So once prices reaches here, all the checklist items satisfied, and there are higher chances the prices will be reaching to your LTF supply zone. This is how you will be planning sideways long trade setup based on scenario 3. Hope scenario 3 is clear to all of you. Okay, the next scenario, fourth scenario, that is the fourth and fifth, we have two more scenarios. They are based on the all-time high. We have HTF demand zone, but we don't have HTF supply zone. When it will happen? When market is at all-time high, we have only all-time high HTF demand zone. So how to plan the trades in this scenario? In this scenario, HTF trend should always be uptrend and ITF trend should be sideways. It should always be sideways. And HTF direction should be from HTF demand zone to all-time high. See here, prices reached HTF demand zone. Now it is pushing the prices up. Because there is no HTF supply zone, definitely prices might be going up to all-time high level. So that's why the price direction should always be HTF demand zone to all-time high. Okay, fine. Let us assume here you have a ITF demand zone. What is the rule? LTF demand zone should overlap with ITF demand zone. See, here demand zone confluence. Both LTF and ITF, they are overlapped with each other. So in this scenario, can we plan a long trade? No. There is one more parameter you should verify. What is that? Curve or location. The LTF demand zone curve should always be low on the curve. Because in all-time high scenario, we have only two parts in the curve. One is low on the curve and another one is equilibrium. There is no high on the curve in the all-time high scenario. So that is the reason why Our trade should only be in the low on the curve. Then only it is the safest to trade for sideways long trade setup. What is the target? Let us assume you have a LTF supply zone is there. Your target could be, once prices reaches here, your target could be until LTF supply zone. You may ask a question. Sometimes in all-time high scenario, there may not be LTF supply zone also may not be available. There may not be ITF supply zone, there may not be LTF supply zone in some of the all-time high scenarios. Some of the all-time high scenario, HTF supply zone may not be available. It won't be available. But ITF and LTF supply zones might be available. Some scenarios. Some scenarios, all three may not be available. We may see both scenarios. Okay, if LTF supply zone is there, our target is until this LTF supply zone. Let us assume there is no LTF supply zone. In that scenario, target is all-time high. We discussed these scenarios earlier. So remember this point. It's very, very important. Okay, in this example, I am displaying LTF supply zone. In this scenario, prices will reach. If there is no LTF supply zone, then only target is all-time high. Okay, now can we plan a trade here? You can plan a trade provided all the checklist items are satisfied. We are going to learn the updated checklist items in third part of this video in lesson 30. That is the upcoming lesson. Then you can plan the trade, and then there are higher chances prices will be reaching till the LTF supply zone. If it is not there, till the all-time high. Suppose checklist items are failed, there are higher chances our LTF demand zone might be violated. That's why we won't plan the trade. Hope scenario 4 is very clear to all of you. And the last scenario, scenario 5. Let us assume prices are moving from all-time high to HTF demand zone. They haven't reached HTF demand zone. So the price direction is from all-time high to HTF demand zone. This is the price direction. In this scenario, HTF trend is up, ITF trend always be sideways, and HTF direction is, let us assume, all-time high to demand zone. In this scenario, how to plan our trade? So as per the rule, mandatory rule, we should have a ITF demand zone, and we should also have a LTF demand zone overlap with ITF demand zone. So it is overlapped. So demand zone confluence, both LTF and ITF. So in this scenario, when prices reaches here, we can plan the trade. So can we go for a long trade when prices reaches into the LTF demand zone? No. There is one more rule is also there. That is location or curve. So even in this scenario, the LTF demand zone curve or location should always be low on the curve, but not equilibrium. Because all-time high scenario, at HTF all-time high scenario, you will be having only two parts in the curve. One is low on the curve and another one is equilibrium. So we should plan our trade only on the low on the curve. So in this scenario, when prices are entered into this LTF demand zone, but before that, what is the target? There should be a LTF supply zone. Suppose if LTF supply zone is not there, then the target is all-time high. You should not forget this point. Okay, in this example, let us assume LTF supply zone is there. When prices reaches here, you can plan the trade. So can we go for a long trade here? You can go for long trade only when the sideways checklist items are satisfied. Otherwise, you can't plan the trade. You are going to learn sideways trade setup checklist items in third part of lesson 30. That is the upcoming lesson. If the checklist items are satisfied, there are higher chances prices will be reaching LTF supply zone. So these are the 5 scenarios supporting sideways long trade setup for any income trade. For any income trade, these rules are mandatory. And any income trade, all these 5 scenarios are applicable. Now all these rules, I will put it in a table. We are calling the table as our decision making table, DMT table. So this is the sideways long trade setup rules. You have learned 5 rules, right? The first rule, what you learned, demand, when prices are moving from demand zone to supply zone. Which demand zone? HTF demand zone to HTF supply zone. That's why the title is HTF direction. And HTF trend should be uptrend. ITF trend should always be sideways. And in this scenario, when both these, all the 3 conditions are satisfied, our location or curve should be either low on the curve or equilibrium. Either side you can plan the trade, but the compulsory rule is the demand zone confluence should always be LTF and ITF zone confluence. So the compulsory rules that cannot be changed is ITF trend should always be sideways in all the 5 scenarios. And also demand zone confluence should be with LTF and ITF demand zone confluence in all the scenarios. Remaining will be changing. Obviously, your trade is a long trade in all the scenarios. And the second scenario, when prices are moving from HTF supply zone to demand zone, also you can plan a trade, but HTF trend should be uptrend. ITF trend should always be sideways. In that scenario, the location should be only low on the curve. You have LTF and ITF, demand zone confluence will be there. If all the conditions satisfy, then you can plan long trade. Of course, your checklist items also should satisfy. That is for trade plan point of view. Next, third, demand zone to supply zone, but now trend is changing. HTF trend is changing to sideways. ITF trend always sideways. In that scenario also you can plan a trade, but location should always be low on the curve and remaining are same. Zone confluence, LTF and ITF, and the long trades you will be planning. And fourth and fifth are all-time high scenarios. So prices are moving from demand zone to all-time high, and HTF trend should be uptrend, and ITF trend should always be sideways, and now also low on the curve we are planning when LTF demand zone overlap with ITF demand zone. You can plan long trade. And the last scenario, fifth scenario, now prices are moving from all-time high to HTF demand zone. In that scenario, also HTF trend should be uptrend, ITF trend should be sideways. Only at low on the curve you can plan the trade when LTF and ITF demand zones are overlapped with each other. So you can plan the long trade. So these are the 5 scenarios applicable for a sideways long trade setup for any income trade. So how they are working at a high level, I will not be getting into the more detailed discussion of the examples. That we have a separate lesson 4. We have a detailed discussion, because by the time we enter into lesson, that is lesson 4 means lesson 30.4. That is the 4th part of lesson 30. By the time we get into that, you will be learning even all the checklist items also. That's why high level I am going to explain how these scenarios are working, because you should get some confidence by seeing some examples. So that's why I am taking the help of NeoStock scan reports, because NeoStock's automation is done already some 2 or 3 months back. We have completed this automation for the scenarios. So this is the report generated on 21st July 2025. Look into this date. So I am selecting this Wipro stock. So this is supporting sideways long trade setup. See, sideways long trade setup. And what type of a trade it is? It is monthly income trade, because entry time frame is daily. Entry time frame daily means it is a monthly income trade. So monthly income trade, Already this zone is tested 2 times. Strictly speaking, including rejections, 3 times it is tested already. In that scenario, can we plan the trade? You can plan if all the checklist items are satisfied. But you are yet to land the checklist. We will see the checklist items at high level. See here. See, already tested first time. And it is already tested second time. See the move, big move it gave after second test. And third time we are focusing. See here, we got a trade on 8th August 2025. When is this report? 21st July 2025. And this report, so somewhere here 21st July, and prices took some more days to reach, and finally it gave a trade. Why we are taking? Because it is having a fine-tuned 5-minute zone. When fine-tuned 5-minute zone is there, do we need to take a trade exactly in the fine-tuned 5 minutes? No. This is not an intraday trade, right? Many times prices may not reach this fine-tuned 5-minute zone. See here, first time without reaching the move, a short move. Second time, see, this is given a very big move, huge profit. So that's why many times you will be planning your trade. But here the problem is risk management. If you are taking a trade, risk is high. So at the time, if the risk management does not support, you can do position sizing and you can plan the trade. Still, if you want to reduce the risk, you have to wait prices reach it to the fine-tuned 75-minute zone. Still you feel risk is high, you can wait up to fine-tuned 15-minute zone. Still you feel the risk is very high, at that time only you should look for fine-tuned 5-minute zone. But before that you may miss many trades, many trade opportunities. See, this is the first trade opportunity. We might have missed it. Second trade opportunity, we might have missed it. Third trade opportunity, we waited until this 75-minute zone. Here it gave a trade. So within this 75 minutes level, I am planning my trade for the risk management point of view. Whether really we should accept this trade or we should reject, that is a different scenario. How these zones are working, that is what we are now analyzing. See, prices reached and recently it achieved 1:3 RR. See here, your entry is somewhere here 238 rupees 70 paisa. And here 1:3 RR 250 rupees, 252.65 paisa. Okay, 5 paisa difference, but otherwise 238. For almost 14 rupees. That means 13 rupees 95 paisa, strictly speaking. 13 rupees 95 paisa profit you got. Almost 14 rupees profit you got. When you got the trade on Friday, 8th August 2025. And when it achieved this 1:3 RR, couple of days before. This is Friday's candle, the recent candle, the last closing. This is Thursday and this is Wednesday. Let us look into the calendar. Wednesday is 20th. 20th August. When you got the trade? We got the trade on 8th August. Here we got the trade. Within how many trading days? This is the first trading day. Second, third, fourth, fifth, this is a holiday. 6th, 7th, 8th. In 8 trading days, Wipro gave you 14 rupees profit. Let us approximately calculate how much profit we would have got as per one futures lot size. Let me open zero the margin calculator. Here I am selecting the stock Wipro. 28th August expiry. Let us assume that one. So what is the quantity, net quantity? 3000. Let me open the calculator. Okay, here lot size is 3000 into, we got 14 rupees, or strictly speaking 13 rupees 95 paisa. You would have got 41,850 rupees profit as per one futures lot for Wipro in 8 trading sessions. Talking about not calendar days, trading days. What could be approximate lot size value? 1,32,000 for the current closing price. This is the current closing price. Price could have been somewhere here. When price was here, because it is at the lower level, the lot size could have been a little lesser. Maybe another 3,000 or 4,000 rupees lesser, or maybe a little more. Okay, let me give some high value only. Let us assume the lot size is 1,30,000. It could be even less value, but okay, we may get our ROI will be reduced, but still okay. So you got 41,850 rupees profit. What is your investment? For 1,32,000 or 1,30,000 rupees, this is the profit you got. For 100, how much? So 100 into 41,850 divided by 1,30,000. Let us assume it could be 1,00,000 could be your investment. You would have got 32% profit in just 8 trading sessions. So this is how the setups work when you plan properly, when you do proper analysis. Okay. Next, let us look into one more example. This is MIT example. Let us look into WIT example. This is a weekly income trade because the entry time frame is 75 minutes. AU Bank. Let us look into this. Alchem is not reached the zone. It was like flying. Prices were moving up. Already it might have entered into bullish trade setup. But AU Bank, when the report I considered, this is the report on, where is the date? This is on August 11th, recently, 1 week back. So August 11th report. So AU Bank has given August report a recommendation, and this zone is already tested once. Can we take a second trade? That is all depending on the checklist items. If they satisfy, we can plan a trade. Otherwise, we should reject. Okay. And I have drawn the zone here. This is a 75 minutes time frame. This is what suggested. And when I fine-tuned this zone until 5 minutes time frame, here we have already a fine-tuned zone. See, already it gave a test. And somewhat it pushed the prices. Maybe 1:3 RR level, it might have already pushed the prices after this. Okay, that is the first test. But when our report, we generated, excuse me, we have one more LTF zone as an horizon to this HTF zone. For the 75 minute zone, there is a 5 minutes horizon is there. And moreover, this 75 minute zone is a high liquidity zone. Did you notice? And this high liquidity zone is having a horizon. That means this horizon is even more powerful. This 5 minutes horizon. So definitely we can plan a trade in this area because first one is already tested. Because it is tested, prices almost reach deep into this distal line, there are higher chances this zone will be violated. As per the checklist items, the fine-tuned 5-minute zone is tested, we won't plan the trade. So that's why. But we have one more order flow is there. That's why we can plan a trade in this area. When it reached this, the next day itself, 12th August itself, the prices reached at 14:15, 75 minutes candle. The last closing hour of the market, prices entered. And if those who have taken a trade in this, prices immediately from the next candle onwards, moving up, moving up, moving up, moving up, and finally reached this 75 minutes target zone. Until the 75 minutes target zone, 1:5.5 RR is there. Extraordinary RR, 1:5 RR. How many trading days it took? 2 trading days. Here we got the trade. See the next day, 5 candles. This is 75 minutes. We will be having 5 candles, 1, 2, 3, 4, 5. The next trading session, in the first 75 minutes candle, price reached this target. Even if you miss booking the profit, see next candles also you got the opportunity to book the profit. And moreover, it is a lesson 22 concept. Lower time frame zone as an horizon to the higher time frame zone is a very powerful concept. Several examples we have seen. How powerful. It is a new concept I developed. This is the strategy I identified. Lower time frame zone as an horizon to the higher time frame. If the higher time frame zone is a high liquidity zone, this could be having even more success rate. That kind of scenarios we have seen, so many. Especially high liquidity zone strategies, many examples we have seen. But anyway, we got a trade and within 2 trading days we got the profit. And achieved 1:5 RR. What is the entry? Here 725 rupees 60 paisa. What is the target? 750 rupees 5 paisa. So let us calculate how much profit we would have got. Here the target is 750.05 and here entry is 725.60 paisa. You would have got 24 rupees 45 paisa, close to 25 rupees, close to. So 24 rupees 45 paisa profit you would have got in just 2 trading sessions. So as per one futures margin cost within 2 trading sessions, how much profit? Actually 3 trading sessions. First trading session, first trading day we got the entry. There is one trading in the middle. Next trading day it reached the target. Let us assume it is 3 trading days total involved. Within 3 trading days, how much profit you would have got? This is AU Bank, right? So AU Bank, let us assume AU Bank August futures we would have taken. So what is the lot net quantity size? 1000. So 24.45 into 1000, that means 24,000. 24,450 rupees profit in just 3 trading sessions. Strictly speaking, 2 trading, but okay. At the end of the first trading session, you got the entry, and the beginning of the 3rd trading session, you got the profit. And what could have been ROI within 2 days? What is the ROI we would have got? Let us do a rough calculation. 1,49,000 for the current closing price. We don't know what exactly the current closing price, but let me say somewhere here I will consider 1,50,000 I will give more value. So into 100 divided by 1,50,000 approximately, maybe a little more or maybe a little less, something will be there. You might have got around 16% ROI. You would have got in just 3 trading sessions. This is a WIT trade, weekly income trade. Okay. Let us look into one more example. That is a DIT setup. We have seen MIT setup, WIT, DIT setup, long trades. This is DIT because entry time frame is 15 minutes. So I am considering this stock Prestige. SBI Life I did not select because it is not yet reached into the zone. The price was moving up. So Prestige, it is a fresh zone. See here, this is the demand zone. And what time frame? 15 minutes zone. So this is the zone we have considered as per the software. And here we have a target zone. See, price has reached this zone. Strictly speaking, we don't consider this trade. The reason is, see, the RR is only 1:2. We need at least minimum 1:3 RR. If you are an experienced person, I suggested you can consider even 1:2.5. If you are a professional, truly highly experienced people, those people will take 1:2 R trades. But all you people should take only 1:3 R. Otherwise, reject this trade. As per the checklist items, we might have rejected this trade. But still, why I consider this example, you may ask. Just to let you know the sideways trade setup, whether it is able to push the price until this zone or not. And this is why we considered, because it is having a fine-tuned 5-minute zone. So it passed our checklist items. That way, this entry is acceptable, but another checklist item is failed. What is that? RR is minimum 1:3 is not there. That's why you may not be taking the trade. But let us see the power of this particular excuse me. Let us look into the power of this scenario. And when our software identified this zone, this is on 12th August. 12th August our software identified. The next trading session, 13th August it gave the trade. And 14th August, the next trading session, it reached the target. Even though we did not take the trade, but it is a successful. According to the software, it is a successful. But according to our checklist items, we rejected the trade because not having enough RR, a minimum 1:3 RR is not there. Suppose, let us assume a person having a very highly experienced person and accepted this 1:2 RR. How much profit you would have got? Let us calculate. So entry is 1619 and target is 1641.55. So 1641.55 minus the entry at the 15 minutes level entry we are taking 1619.15. 1619.15. You would have got 22 rupees profit. Just 2 trading sessions. First trading session you got the entry. Second trading session you got the profit. 22.4 rupees. Of course, we don't accept this trade. Please remember, we rejected this trade because it is not having minimum 1:3 RR. But according to the zone point of view, it gave the profit. That is what we are calculating. Just to understand the power of this concept, I selected this example. More examples we discuss in the 4th part of this lesson. At the time, we will check all the checklist items, how exactly we should plan the trade, everything in detail we will discuss. But now you should understand its power of this sideways trade setup. Okay, 22.4, which stock? Prestige, right? So Prestige August futures I am considering. And what is the net quantity? One future 450. So 22.4 into 450. You would have got 10,000 rupees profit in 2 trading sessions. First trading session entry, next trading session exit. What could have been the ROI? Let us calculate. The margin is 1,87,926. Maybe it could be a little higher or little lower based on the current value. Say, let me consider 1,88,000, some approximate value, into 100 divided by 1,88,000. This is not exact value, but somewhat close value you may get. So you would have got 5.36% or 5.3% ROI you would have got in just 2 trading sessions. So this is how you should understand how these sideways concepts are working and how our software is tracking these zones by satisfying all the rules that you learn in all the 5 scenarios. Because the beauty of our software is it is performing multi-time frame analysis. That is the beauty of our software. It performs all the time frames. It performs top-down analysis from yearly time frame until 5 minutes. It performs all the analysis. Any level it will give we can track the results. We can get the reports. That way sideways reports, it is working. Of course, there are some zones might violate because the checklist items may not be satisfying properly. Some zones may violate even after satisfying the checklist items because of some dynamic changes in the market, but they are the rare scenarios. That's why no system will give you 100% results, but a better results they are giving with better ROIs. Always we will be in profits. So these are the few examples. This is a DIT example. So in the upcoming sessions, you will be learning sideways short trade setup in the next video. The third part of this video, you will be learning trade acceptance checklist. Lesson 20, whatever the checklist items you land, any changes in that checklist, we will be looking into them. I will be showing the complete list. Wherever changes are there, I will explain in that video. And last video, we will see more examples so that we can analyze and we can verify all the roles. How manually, without the help of the software, how you can practice, that we will see. See, software is only helping you to save your time. It won't do anything. Once the rules are defined, manually we will be doing, but you will be verifying 200 stocks. How many days it will take? Several days it will take. The same thing, software will finish the work in few seconds. That's it. That way we save time. We get exact results. Those results we analyze and we take the decisions. So when your time saves, what will happen? You get more trade opportunities. You may get better profits. That is the only advantage with this software. That's it. Anyway, software is not giving you any trades recommendations, right? It is only giving you the zones. Because trade recommendations will always fail because market is dynamic. So that the rules will be changing. When you know the subject, when market is dynamically changing, you will understand all those changes. Based on that, your decision making will be changing. So that way quickly you will either exit the trade, already you are in the trade, or you reject the trade. But if you give recommendations, you may not be knowing those changes. Blindly we take the trades without understanding market dynamics. That's why those people who are taking recommendations, the entry, exit, stop loss, 90% they get failures only. This is one of the main reason always I say. This is the reason why I don't like to go for giving recommendations. Instead, you learn the subject, you gain the knowledge. You will be in the right position to take the decision when market is dynamically changing. So that you always get better profits and always you get less losses. Okay, this is about the first part of lesson 30. Let's all meet in our next lesson, and then we learn sideways short trade setup rules and a few quick examples. Thank you all for attending this session. Let's all meet again in the next video. Have a good day.